Hey guys, Joel Frank here, market analyst for YouTrading, and today we're going to take a quick look at crude oil markets. There's a lot been going on, and it's all being driven by OPEC. Let's take a look at the chart and I'll explain. So I've got crude, this is WTI front month futures, and you can see in the last couple of candles, or the last few candles, over the last 2 days, there's been quite a lot of volatility. Like if you zoom out, you can see it's been much choppier than usual, with obviously this downside bias. Now, let me just talk through the fundamentals that have caused this. Well, last week we had the OPEC Plus meeting. Now, initially it looked like they were going to make this agreement that was going to be bullish for oil markets, where they would essentially be steadily increasing output in August through to the end of the year at a pace that was a little bit below what markets had been expecting going into the meeting. So that's why we saw this initial upside. Then, I believe it was sort of at the start of this week, we saw some more upside because basically over the weekend, the OPEC Plus talks basically failed, and there wasn't any deal for August or beyond. So people were thinking, okay, so if there's no deal for August, that means no output increase. So that's why we saw even more upside. But then it sort of quickly seemed to become apparent that actually no deal isn't a good thing for oil, because first of all, if you've got basically all these OPEC nations want to increase output because they know they've got room to do so because global oil demand is so good. So the fact that they weren't able to agree a deal means that compliance in August to the current deal is likely to be poor. People are probably just going to increase output anyway, and that could be bad. So that's one reason why we've seen this drop, quite a hefty drop in the last couple of, 36 hours or so. Another reason is more specifically on the reason for the disagreement itself. So just to summarize really quickly, the problem that OPEC is having that's stopping a deal all comes down to the UAE pretty much. The Saudi Arabians wanted to extend this current OPEC Plus agreement from April 2022, which is when the entire agreement is scheduled to end, until the end of the year. However, the UAE, they do want to do that, but they want to tweak the type of deal. So at present, output cuts are calculated based on all of the OPEC Plus countries' output in 2018. The UAE don't want that. They want a more recent baseline from which you calculate output cuts. Pretty much they want to increase output. It's as simple as that, really. And the Saudi Arabians don't want to let them do so, because then maybe other countries will ask the same thing. And obviously, as this goes on, there's an increased risk that the cartel could just completely collapse. And there's a risk that we could return to the price war that we saw it wasn't this time last year, it was a little bit longer ago. But remember, about 14 months ago, we had this price war between the Russians and the Saudis basically punishing them for disagreeing. Are we going to see that again? I mean, I don't think so, but it is a likelihood that markets have to price in. So basically there's all this uncertainty as long as there isn't a deal. So we're seeing this downside bias to crude oil market trade, hence what we're seeing here. So let's talk about from a technical perspective. Obviously you've had this uptrend that's been pretty solid over the last couple of weeks. Well, unfortunately for the bulls, looks like that has gone. Now we've broken to the south of that. We're also currently challenging this low from right at the end of June, and it looks as though, we're testing it. We're pretty much bang on it right now, as you can see where we are currently, but we are below the 21-day moving average. If this level goes, well, then you've got to move on to this next. It's just going to be dominoes really until one of these support levels holds up. So it's like price is probably going to fall to this low here, which is the 17th of June. Can't select it. Oops. There we go. I'll just draw a new one. Sorry, I'm having problems with my arrows. Yeah, and then if this level goes, then we'll have another drop to this next area of resistance, and so on and so forth. I think this area here, 67.50 to 69 kind of area, if you zoom out quite a lot, as you can see, There was this high from Q1, that's going to be decent resistance. The green line, that's the 50 DMA, that's going to be decent resistance. Obviously, you got this low here as well. So yeah, I mean, I don't think we're just going to cascade through all of these key levels, unless, of course, there is a price war and the Saudis start pumping, and then obviously who knows what might happen. It's going to be volatile. It's going to be very interesting, guys, going forward. OPEC Plus going to be a very important theme for crude oil markets. Make sure you stay tuned. I hope you enjoyed the video, and I'll see you all in the next one.